Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Thursday, the 6th of January. Starting off with Angus, where looks like we might finally be on our way. The reason for saying that is apart from the fact that we've had spikes which have failed before, but on this occasion, a gap to the upside through the 50-day moving average after a bear trap, that should be enough to get the shares going. So while we're above 0.7, which was pre-December support, looking for as high as 2 pence, which is the top of a broadening triangle from the beginning of last year. If you're cautious, maybe you wait for a clearance of the 1.1, 1.2 pence area, but above the 50-day line at least, and that's a 0.8, then the shares should be on their way. Moving along to a stock which has not been an easy situation, at least until now. A similar, here we've got shares once again bouncing around the 30 pence level. There was an uptrend line there, but that's temporarily broken, but it looks as though this could be a bear trap below 30. If you're cautious, maybe you wait for a break of this resistance line there from back in November. That's around the 34 pence level, so an end of day close above 34 could lead back to the main resistance here at 43, but just the idea here today that 30 pence or thereabouts is the floor in a similar. Moving along to stock which gets periodic coverage here, Aminex, and the reason for inclusion today is really the idea that we had a gap down in December. We filled that gap and reverse, so sort of a bear trap gap reverse signal there above 0.6, looking for at least the 0.75 area, which was post-October resistance. Big picture target maybe over the next 2 to 3 months as high as 1 penny or 1.1 pence, which is the top of a March 2021 rising trend channel. This stage really well below 0.55, delaying the upside scenario. On to another stock which is back in business after quite a long time, Argos Resources. Here we've broken that line of resistance from May, held the 50-day moving average, which is normally a good thing. Sort of V-shaped bull flag here and a gap higher does suggest that the shares could at least head back towards the 200-day moving average at 2 pence, and maybe after that, maybe by the end of next month, up to 2.7, 2.8 pence, which is post-June resistance. Only back below a penny, really, well below a penny, well below the 50-day line, really delaying the upside scenario. On to Bidstack, which has been one of the best recoveries of the last month or so. Here we have the old target around 4.5 pence, above 4.5, looking for as high as 7 pence, which is that June resistance line projection. So it looks as though we're ready to head there quite soon, maybe by the end of next month. Stock which had some news earlier in the week, Brand Shield with its 3.0 offering. Here we've broken a line of resistance there from April, and the 50-day moving average at 17 pence. Above that, looking for the low 20s, maybe 22, 23 by the end of the month, something like that. Good dividend news today from Eurasia, which was sort of a top pick for 2022 in my countdown that I did over Christmas and New Year. Here we're once again approaching this rather sticky line of resistance from September, around 25 pence. Weekly close above that could open up a decent upside for the shares, perhaps up towards that line of resistance there from January, 40 to 45 pence. But let's see if we can break for 25 pence pretty soon. If we can do that, then it's up towards hopefully the post-September resistance for the shares. But looking positive while we remain above at least the 20 pence area. Stock which I think was requested by one of my Twitter followers. Here we've got a break of a resistance line there from February for Location Sciences, and the 200-day moving average at a half penny. Above that, we could be on the way to a 1.2 pence target. The reason for the relative optimism here, apart from that trend line break, is the way that the 200 and the 50-day moving averages are both rising. So we're in the run-up to a potential golden cross. The run-up to that particular signal tends to be the strongest part in the technical cycle. Interesting machinations at M&C Saatchi, sort of in-house M&A from the company, which is something of a novelty, I would suggest. Here we've got a rising trend channel from March. We've gapped through old resistance, which tends to, and held it, which tends to be a very strong signal, obviously on the M&A news. 192, the level in question. Above that, we could head up to £2.80 with or without any fundamental backing on that. Just 3 stocks to go now. Another request. Here it comes in the form of Shoezone. We've got a breakout here, broken through the 117 peak intraday high of last month, and looking for 140, which we've been doing for quite a while. Obviously, that looks as though it's not as difficult as it was previously to attain, and it might mean that one can revise the upside target. So above 117, looking for 140. After that, if you're a fan of the shares, maybe up towards that line of resistance from November 2020, as high as £1.60. So 160 on offer maybe over the next month or two for Shoezone. SDX is next, and we've got another trendline break, and we've got a gap to the upside. That's the second gap we've had. We had a gap closed by signal, so a bear trap gap reversal, and a gap through the 50-day moving average, which is normally quite healthy. That suggests that we could head up to the August gap, the top of that, at 14 pence, maybe by the end of next month, especially while we hold above the 9 pence support area. Finishing off with another minnow, Westmount Energy. Here you can see that shares have broken a rather obscure line of resistance there from back in January last year. That was at 6 pence, and above that, looking for some kind of fill of that big gap down that we had at the end of October, beginning of November. That suggests maybe 9 pence could be on the cards while we remain above 6 pence on Westmount. That's it from me today. More updates tomorrow.